Hello and welcome to Edison TV. I'm Miłosz Papst, Director of Investment Trust Content at Edison, and today I'm joined by Dr. Christian Koch, who's head at BB Biotech. Thank you very much for joining us today.
Thanks for having me.
Perhaps we can start by discussing the JP Morgan Healthcare Conference, which is one of the key highlights in the industry every year. Can you maybe outline your key takeaways from the conference, which took place earlier this month?
Yeah, I think overall sentiment has been constructive, positive, most positive in a couple of years, I would say. But it's also become evident that I think for financial markets, that conference has become less important. On the flip side, it's become even more important for industry because there's all kinds of players in the ecosystem mixing and mingling with each other. Why has it become a little bit less for financial markets? It is because there's a lot of pre-releasing going on a week before, and there's less surprises. There were some big rumors, M&A rumors before the conference. They haven't manifested yet, but we, and I think many other players, believe that structurally they will happen over the next couple of months. So it could be that JP Morgan here is more the accelerator of those talks. I guess it is also difficult to time those deals for materiality reasons that they exactly fall onto the start of the conference. So it's changing a little bit, the dynamic there. We have several larger broker conferences now throughout the year. And the pattern of when acquisitions happen, they're more, I would say, tail end loaded into Q3 versus Q1 and Q2. So overall positive. There were very high expectations into the conference on M&A, and despite them not being fulfilled, I would say they were at least halfway stable financial markets. In prior years, I think the lack of that could have led to a pretty strong correction, but the overall sentiment in the industry is good and positive. Seems to be some political tailwinds. Interest rates curves seem shaky, but they still will likely lower in the US throughout 26. So I think the overall feeling in the whole ecosystem is still very constructive. And on the fundamental side, I think there has been a lot of developments. The breadth of the industry is impressive in terms of fundamental progress across clinical pipelines, but also commercially, even smaller companies driving good launches. So that's the overall sentiment there as a kickoff. I think this conference was a good start.
Thank you. That's very insightful. So you've highlighted the increasingly positive sentiments, and you've mentioned the outlook for lower interest rates and the fundamentals of the industry. So maybe you can delve deeper into those drivers and tell us more about that.
Well, M&A is one of the big structural strong drivers. Depends on how you look at it. There's somewhere between a 200 billion patent cliff over the next 5 years, up to 400 billion over the next 10 years. Pharma is known that they cannot cover that with organic R&D and return on R&D. So they're definitely dependent on external innovation. And we're seeing that in deal behavior and multiple bidders on deals. So that's a big and strong structural driver. They do have the cash reserves and possible debt that they can use to conduct those acquisitions, somewhere north of 500 billion in aggregate. Aside from that, the interest rate level lowering is for these high capital intensive endeavors is definitely positive, especially for the small and mid cap end. And then beyond that, I think what helped a lot throughout the last couple of months is some clarity on especially the US end market on pharmaceuticals. We've seen now, I think 16 of the 17 players that were addressed in a letter by the administration have done a deal. I think it's just Regeneron who's left there, which creates some stability, at least for the next 2-3 years, of how we think the US end market will behave across the different channels. There's some possible scenarios that there might be some profits that could be generated in the future outside of the US, but that remains to be seen. So with that took out some uncertainty out of the Liberation Day tariffs situation, most favored nations pricing. There's still a lot of residual things that can happen there, but overall, I think the table is set there. And despite that pretty good year that the industry had in 25 on the financial markets, we still think valuations broadly are attractive. Every once in a while, there's some exacerbations, of course. We have to watch that we stay clear of, but I think that's a good combination, right? M&A with fairly good or attractive valuations, with the political climate definitely becoming stronger. We see more generalists starting to be interested because of the momentum the industry has coming from multi-year lows. So that mix of things makes it, I think, a very interesting sector.
Thank you. Now you've mentioned M&A driven by, of course, the looming patent cliff and the high cash position of big pharma, and it seems that BB Biotech has benefited from several recent transactions. So can you maybe summarize those?
Yeah, sure. I mean, the pattern is clear. Pharma is looking at the moment at late stage clinical and early commercial. Out of the 4 acquisitions we had in the portfolio last year, one was a long-term holding, Intracellular, acquired by J&J for their asset in psychiatric diseases. The other 3 were newer investments on our side that we deliberately conducted in that late stage clinical, early commercial frame. That was Blueprint Medicines and Akero Therapeutics, for example. And then lastly, Avidity. That was later clinical, you could say 2+ blockbusters there. So it is exactly that what can serve pharma to help dampen or mitigate part of their patent cliffs. So those need to be fairly large products, and they need to be launched, already launched or to be launched in the next coming years if you want to help dampen at least that 5-year cliff. That's a pattern we've seen there. We had another acquisition based on a company that we had invested in Q4, but we'll disclose that in our annual report. Yeah, I think overall I can say in the portfolio we see, out of the rumored names on the M&A lists, I think we have a decent amount of those companies. Can't really pinpoint them, but I would say there are several, up to a dozen of them in the portfolio, maybe M&A candidates. We'll not hit all of those dozens. I think 1 or 2 or 3 acquisitions per year are a good capital recycle for us to rethink where we want to deploy those cash reserves that we currently have.
Excellent, thank you. And I also want to touch upon agentic AI, which seems a relevant part for BB Biotech. So maybe you can tell us more about how you use agentic AI in your investment process, and where does it add the most value?
Yeah, so I'll take a step back a little bit. My background is actually I have a PhD in machine learning for drug discovery. So always very digital. Always fascinated how little finance was entangled with these more advanced analytics. So we started hiring somebody 5 years ago already as a first data scientist. 3 years ago, we expanded that to 2 people. Nothing of that was agentic AI. That's mainly digitalization. And a year ago, we decided that we want to expand that team because we were seeing these large language models, what they could deliver, but especially if we would parameterize them and design them in a way that they would be autonomous, and that falls, or autonomous agents. That's why that falls under this umbrella, agentic AI. What we've done is digitalize our entire investment process from tip to toe. That happened more or less in the last 2 quarters of last year. That's only possible to do that so quickly because of using agentic AI for coding. And we quickly realized to really go for the more difficult tasks. So trying to build agents for various subtasks of our diligence. We needed more capacity on the design side. So we're expanding that team to then 5 people with different roles. Some are AI ML engineers, some are architects, software architects, really. That gives us 5 people who are really embedded with the investment team together. That's a significant investment, right? We have 6 investment analysts and 5 AI and data scientists. And it will take some time for that to contribute more and more. And it starts on the shallow, low end of productivity and then can lead up all the way of generating insights, finding new things, handling real world evidence. Overall, that disutility of scaling things manually, if you can realize that efficiency alone just through then doing more analysis can deliver insights and patterns that we may not be aware of yet. So we're early on the journey there, but we're taking it serious. The most difficult parts will be the most value creating parts that will take some time to deliver. Good thing is with the full digitalization of our process, we can track and measure everything that humans do in our part, as well as what machines may contribute in the future.
Thank you. This sounds very, very promising. And now looking ahead through 2026. Now, of course, you've given us some background in terms of the market outlook, but maybe you can tell us also what can we expect from BB Biotech in 2026.
Yeah, we have a fairly good bolster of cash-like investments at the moment, where we're waiting for the acquisition because we received something. Like in the case of Avidity, we received the spin-off shares. So we have some resources we can deploy between cash acquired positions and potentially even leverage. And the team, we've regrown it, reassembled it in the US, is looking for new investment ideas. I think there's multiple ideas that we have taken out of JP Morgan, be it on the public side or on an IPO. Companies considering an IPO or even on the private side. So we're looking to deploy that capital and increase the number of positions in the portfolio throughout the year. Where we are invested, I think we see several clinical milestones, more so than the last year, that can be value creative. I think last year was a year of launches for us. This year, it's starting to tilt a little bit more towards late stage clinical also. That's, I think, a very promising outlook because the launches are still ongoing in the companies that we're in. And then depending on where valuations move, we'll be very disciplined on the individual investments in terms of sizing and our risk positioning there on every individual position. But there's a whole catalog basically of milestones that will unravel from Q1 all the way to Q4. We're actually using an AI agent also to adjudicate those and to generate some time and efficiency on there. There needs to be a very high sensitivity actually on validating those, right? That agent provides a very high sensitivity and accuracy on delivering that, and can be some time savings for the analyst if that happens in a dynamic fashion. In our investor presentation, we'll lay out what those milestones look like on the regulatory side, on the late stage clinical and the early stage clinical side.
Dr. Christian Koch, head at BB Biotech, thank you for this fascinating conversation.
Thank you.